The M&W patterns are present throughout the price record. This is an example of the crash of 29 through 33 of the U.S. stocks and global stocks. Here we see, following the actual crash, that you have a bear rally that sets up going into March, April 1930, and this plots a W5. The form of the bear rally is in the form of a W. It's a W5. Not every bear rally is in that form, but these are. Then in July, August, September of 1930, you have another W5. Both these patterns lead to sell-offs in the context of this great downtrend. Then again in October of 1931 and probably about March of 1932, there are two more W5 patterns. This all occurred, of course, in the context of one of the biggest sell-offs in history. And it shows also that these patterns were present in the price record prior to their existence being publicized, which points to some sort of intrinsic dynamics that causes the plotting of these patterns. Next, we'll take a look at the actual bull market that preceded the crash. So here we are, looking at 1924 through 1929. We see a set of M-shaped bullish entry patterns. First we see an M12, then another M12, another M12, then an M7, and then another M7, moving from left to right. So it's fairly clear here that these patterns tend to occur coincidentally with lows in price. These are retracement patterns, and so what you're doing is you have your trend identification through some other method, and then what you want to do is look to apply these patterns to give you excellent entries. I mean, the price record is here. This is not curve fitted or anything of that sort. You do have to use a bit of reason to and just experimentation to find the right settings to use. However, the settings are very generous. It's not a highly specific, easily curve fitted type of approach. Much the opposite of that. These patterns are actually present. The best trading rules to come up with a trading system that incorporates these trading tools, well, we leave that up to the trader. We will offer a course later on, but for now, it's up to everyone who uses these tools to just figure these things out for themselves. This is no surprise for most of you traders. The fascinating thing, again, is that there was a huge uptrend. This is starting in 1924, 1926. We see a pattern. These patterns had not been publicly identified at this point. They were simply occurring. And that shows a powerful truth about the nature of price action. Here's a more recent example of the EURUSD exchange rate from the highs that occurred near December of 2009. We can see several W patterns. You have one coinciding with the absolute high of the previous up move, and then you had, this is on a daily time frame, and then you had two W5s in the context of the downtrend. These retracement patterns occur over and over and over. They are extremely useful provided that you are trading with a trend and you are trading cautiously. It's a tool. They're trading tools, and if misapplied, they could lead to too many entries that are faulty. However, that's why they're not a trading system in and of themselves. No matter what pattern identification method you use, you at least have to incorporate another element, such as confirmation. I mean, even a double top classic pattern, you still wait for that break or some kind of other factor. Just because you think you have a double top, you don't jump right in and sell. You wait for the breakout, or you look for some other sort of confirmation. So same goes with these patterns. You need to use additional tools to make a successful trading system out of them. However, they do tend to identify very tradable price points, as your testing will show you. Here's a recent issue of great publicity, Facebook. We're looking at just 3 patterns which occurred on the 15-minute. What you see is the first pattern is an M12, and it only reacts upwards slightly after plotting and then collapses. As common wisdom and as worth looking at, when patterns fail, it's giving you more information. Here you have a bullish pattern failing, well, then prices may be headed lower. And the next pattern that occurs is a W10. And so that's a bearish pattern into the close, and the next day, sure enough, you have a sell-off that continues through the next day and a half. Then the final pattern that we see so far is another M12, which plotted into the close yesterday at the time of this recording, and we've seen nothing but up since then. So these patterns work in real time, so they're very useful. You can use them in automated strategies. You can test them using any metrics you want. The M&W patterns take many different forms. We only offer 3 of the possible forms right now. However, the others are in the works and should be coming out soon.